Well, good morning, everyone. I'm Ed Parcaut. Mike Kelly's not making it today because, as we're finding out with internet, it's very important to have a really high upload speed. I've got mine fixed at home. We're gonna get the office fixed next week, but he's having an issue. He's in Colorado, and it's just really hard to do it on your phone on regular Wi-Fi unless you have a really good upload speed. So we're just gonna get going, and we'll see what happens. All right. So a couple things I want to talk about today. Stocks and mortgage bonds, they're both going up a little bit today at the same time, which is unusual. Usually they go in different paths, but they're both doing decent today. Let's look at some of the numbers that we've had for what we're saying that we're going to see going forward. All right. So I want to start with home appreciation. All right. So you have CoreLogic reported that there was a 0.9% rise in home prices in May, and April saw a 1.2% increase. So now home values are up 1.4% year over year, which you're saying probably, I thought values were going down. That's what I heard out there. I hear that on the news. No, they're wrong. That's not what's happening. Look at the numbers. Numbers don't lie. So other people do. All right. CoreLogic forecasts that they predict a 1% rise in home prices for June. That's last month. Remember, we're always looking back. And they project a 4.5% increase over the next 12 months. Well, I thought we were supposed to be down. No, we're going up. And that's what we've been talking about for the last 6 months. It's best time to buy right now. On track for a 10% appreciation based on gains from beginning of the year through May. That's major, 10% increase. Black Knight came out with their numbers, and they said 0.7 in May, and they experienced a 0.5% increase in both April and May. That just doesn't make any sense. I would say April and I bet you that was supposed to. Anyway, that's what it says. So maybe they're messing with me. May and a 0.5% rise in April and May. Maybe they were expecting that. I apologize. Anyway, home prices have shown that they've been rising consistently since January of this year. Last year, we didn't see much appreciation, but we didn't see a lot of house values going down. We just saw more of the median numbers going down. That means the lower price homes are selling versus the higher price homes because of the payment. People are payment shocked right now when they go to get into a loan, and that because they were so used to what they heard before. You could get in for what you're paying rent, and that's not what's happening right now. So what we're saying is home values have erased all the losses from second half of 2022. So with the numbers I'm telling you are nationwide numbers, not in California. So if you're with me in California, we're always totally completely different than the rest of the country. We always do double and triple. So we look at appreciation rates of what they're saying going forward. CoreLogic suggests a 10% appreciation rate for 2023, which we looked at some numbers a couple weeks ago, and they're all saying about 5% or maybe 1%. Now they're saying 10%. Black Knight projects stands at 5% appreciation. I just think if we're staying where we are with limited inventory, so if rates don't go down at all over the next 6 months, we're still going to, or even a little bit, we're still going to see the tight market of homes. We're going to see people buying, the higher price homes are not going to sell as fast. You're going to see the medians, middle of the lower end, going to sell much faster. I'm not saying the upper ones aren't, but they're not getting as much pull as what they used to, meaning multiple offers. They're getting some, but not exactly what it was. Also in June, we had the small business optimism index rose from 91 to 91 from 89.4%, which still remains the lowest levels overall that we've seen. So that's telling you that businesses are actually thinking that it's still bad out there. So this is some of the notable things where it says here, weaker labor market, lower inflation. They looked at it. They plan on hiring fell 4 points. It means it's the lowest level since October of 2016. Job openings fell 2 points, and that's the lowest of the year. So current compensation fell by 5 points. So basically what they're saying is this market's getting tighter, and that's what we're seeing. And that's what the Fed is doing. They are raising short-term interest rates. They are causing some of this. And this is what we're not used to, is we didn't see the change in the unemployment like we should have been seeing the change with raising the interest rates 4% or 5% over the last 6 months. we should have seen a major difference, and we haven't seen that. It's starting to come. And so we'll get ready for that recession. And again, like I said, it's just I want to get these numbers out today because this is the numbers that came out. Tomorrow is you got CPI and PPI on Friday. Those are the two biggest numbers going to change the market and see where it's going. But right now, the market's liking what it's hearing. And again, Mike will be back hopefully tomorrow. If not, definitely by Thursday. All right, everybody make it a great day. And thanks for watching.